Hi, Larry Gaines, PowerCycleTrading.com. So in this video I want to talk about seasonality, and if you're not aware of seasonality and the benefits that you get, you're really missing out. So one thing, there are major seasonal trends that happen each and every year, and so just want to point out one as an example to you. So here's gasoline. These are seasonal statistics going back 15 years. So if you look at my pointer over here, this has been over the last 15 years. This, if you buy gasoline and basically in February and March, it's been a winning trade 14 out of 15 years. So 93% high winning probability. So basically these stats are based on, in the first trade setup, getting in around the 5th of February, over the last 15 years, then you get out into March. Now, so the potential of these trades are huge too. So if you're using futures, it's potentially $7,200 per futures contract. That's on a futures contract. Now, here's the next one right here. Let me switch pages. And so if you see this is July. So this is July contract of gasoline, and it too, for the last 14 out of 15 years, you see my pointer here, has been a winning trade if you were to buy this approximately around the 1st of March, and then you get out mid-April. So to summarize this, it's a very strong seasonal trend that happens each and every year, and it's been happening over the last 15 years. So let's take a look at the seasonal continuation chart and then in a regular chart. So this is a seasonal continuation pattern chart, and it's showing you July RBOB gasoline, which is gasoline. So you can see here over the last 5, 15, and 30 years, this has been a trend to the upside. So this is early February, and then this is early March, and this trend can last all the way into mid-April. Very strong gasoline trend as you head into Labor Day. That's typically what happens. Gasoline starts getting bid up, getting prepared for the summer driving season. Now, the next thing that we do at PowerCycle Trading, we use seasonality as kind of a potential to spot a big trend, but we use our indicators and momentum-based indicators to actually enter into a trade. So here's the June RBOB futures contract on a daily chart, and we set this trade up. We got in right here. I'll show you that we used the ETF, actually, UGA. So right here on the 6th of February. So this is what we call a volatility squeeze. So when we see the seasonal potential for a big trend up, then we look and start watching the charts for trade setup. So you can see here how it broke out really hard. So it went here from $1.66 straight up to $1.80 basically, and that on a futures contract is, so if you were to have bought one futures contract right in here, the 6th or anywhere in here, at that point in time, you can see it was $1.65 per gallon, and then it broke hard up here to almost $1.80, so $1.79 per gallon. So that is approximately 14 cents per gallon, and on a futures contract basis, if you did one futures contract, that's over $5,000. Now, the other way you can do it is with UGA, and this is the ETF for gasoline, and you can see the same volatility squeeze. And so right here was the date of the signal to enter based on our indicators. So right here at around 24.70. And this was the one that you could do either buying the UGA ETF outright, or you could have done it with calls or a call debit spread. So I hope you enjoyed this video on using seasonality and trending tools or technical indicators for another way to capture good trade setups.